Hey everyone, this is C Crypto Daily Buzz. Today is Sunday, March 9th, 2026, and this channel summarizes the most important crypto news for investors in Southeast Asia. We have a packed show today, 6 major stories to cover, so we split this into 2 parts. Let's jump right in. Our first story. Bitcoin tumbled below $66,000 over the weekend as oil prices exploded nearly 20% higher. West Texas Intermediate crude surged past $107 a barrel, and Brent crude topped $108. The first time oil has crossed the $100 mark since 2022. The trigger is the escalating military conflict between the United States and Iran, with growing fears of supply disruptions through the Strait of Hormuz, which handles roughly 1/5 of global oil shipments. U.S. stock futures dropped nearly 2% across the board, and Bitcoin followed, briefly dipping below 66,000 before recovering slightly. For investors across the Philippines, Vietnam, and Indonesia, this matters because higher oil prices feed into everything, from fuel to groceries to remittance costs. If this conflict drags on, expect tighter monetary conditions and delayed rate cuts, which historically hurt risk assets like crypto. However, Bitcoin is showing relative stability compared to equities, and some traders believe the initial shock has already been priced in. I would keep a close eye on oil prices this week. If they stay above 100, crypto could face more downside pressure. Story number 2. The Crypto Fear and Greed Index has dropped to extreme fear territory, sitting around 8 to 18 depending on the source. To put this in perspective, the index was at 25 mid-week, but sentiment collapsed again as geopolitical tensions intensified. Around 38% of altcoins are trading near all-time low prices, and overall trading volume has dropped roughly 50% across the sector. Short-term Bitcoin holders are deep underwater. Their average cost basis is around $86,000. While the current price is about $66,000. That $20,000 gap means many retail investors are sitting on significant unrealized losses, and analysts warn this is a classic bear market signal. But here's the thing, historically, extreme fear readings have often been followed by strong rebounds. I'm not saying buy the dip blindly, but if you're a long-term investor in Southeast Asia, these are the moments that usually create opportunity. Watch for the index to stabilize above 20 before assuming the worst is over. Story number 3. Bitcoin ETFs showed an interesting push and pull this past week. In the first 3 trading days of March, spot Bitcoin ETFs pulled in $568 million in net inflows, led by BlackRock's IBIT fund, which alone attracted over $300 million. This broke a 5-week streak of outflows, signaling renewed institutional interest. However, on March 6th, we saw a sharp reversal, $228 million in net outflows, with BlackRock's IBIT losing nearly $89 million in a single day. The price of Bitcoin was hovering just below 71,000 when those outflows hit. So, what does this mean? Institutional investors are clearly not giving up on Bitcoin, but they are becoming much more tactical, buying on dips and selling into short-term rallies. For Southeast Asian investors, this is a signal. Follow the smart money's pattern, not just the headlines. The ETF market now holds roughly $88 billion worth of Bitcoin, about 6% of total supply. That structural demand isn't going anywhere, even if daily flows bounce around. We still have 3 more important stories to cover. Let's continue in part 2. Alright, let's move on to the next 3 stories. Story number 4. The U.S. Securities and Exchange Commission has settled its 2-year-old fraud case against Justin Sun, the founder of Tron, for just $10 million. The SEC originally alleged that Sun orchestrated hundreds of thousands of wash trades to inflate Tron's token price, generating around $31 million in illegal profits. He was also accused of paying celebrities like Lindsay Lohan to promote the token without disclosing the sponsorship. Under the settlement filed on March 5th, a Tron-affiliated company called Rainberry will pay the $10 million fine, while all claims against Sun personally were dismissed with prejudice, meaning this case is permanently closed. Sun himself celebrated on social media, calling it a resolution. Critics have called this a slap on the wrist, especially compared to the scale of the alleged misconduct. For the broader crypto market, this signals a shift in how the SEC handles enforcement under the current administration. The SEC appears to be prioritizing settlements over prolonged litigation, which could mean more regulatory clarity ahead. For investors in Southeast Asia, where Tron is widely used for stablecoin transfers, especially USDT, this removes a major legal cloud hanging over the ecosystem. Story number 5. Binance, the world's largest crypto exchange, is targeting 5 additional licenses across Asia in 2026. According to a report from Nikkei Asia, this would bring the total number of jurisdictions where Binance holds regulatory approval to over 20. The exchange already has licenses in Australia, India, Indonesia, Japan, New Zealand, and Thailand. A key development is the finalization of Binance's acquisition of GoPax, which will give it a licensed presence in South Korea. Binance's Asia-Pacific head called the region the company's crown jewel and its fastest-growing market. This is very relevant for Southeast Asian investors because more licenses mean more consumer protection, more fiat on-ramps, and more legitimacy for the exchanges you use every day. If you are trading on Binance in the Philippines, Vietnam, or Indonesia, this expansion effort directly benefits you in terms of regulatory safety and access to new features. The broader trend here is clear. Asia is becoming the center of gravity for global crypto adoption, and major exchanges are racing to comply with local rules rather than operate in gray areas. And our final story. South Korea is advancing its landmark Digital Asset Basic Act, which could reshape crypto regulation across Asia. On March 4th, the Financial Services Commission held its first Virtual Asset Committee meeting of 2026, reviewing the draft legislation with officials from multiple ministries. The bill aims to establish clear rules for digital asset classification, issuer disclosure requirements, and investor protection, essentially treating crypto more like traditional financial securities. A notable proposal is requiring stablecoin issuers to maintain minimum capital of 5 billion won, roughly $3.5 million. Korea's Democratic Party and the FSC have also agreed to diversify who can issue stablecoins, moving beyond just banks to include regulated fintech firms. For Southeast Asian markets, Korea often sets the regulatory template that other Asian countries follow. Vietnam's new digital transformation and information law already took effect in January, and regulators in Singapore and the Philippines are watching Korea's approach closely. If you are invested in any projects with Korean connections, or if you use Korean exchanges, this legislation will have a direct impact on how those platforms operate and protect your funds. Let's wrap up with a quick summary of everything we covered today. First, Bitcoin fell below 66,000 as oil prices surged past $100 amid the US-Iran conflict. Second, the crypto fear and greed index hit extreme fear levels around 8 to 18, with short-term holders deep in the red. Third, Bitcoin ETFs saw 568 million in inflows early in March, then 228 million in outflows by Thursday. Fourth, the SEC settled with Justin Sun and Tron for $10 million, closing the case permanently. Fifth, Binance is pursuing 5 more Asian licenses in 2026, including South Korea through its GoPax acquisition. And sixth, South Korea is moving forward with its Digital Asset Basic Act, setting new standards for stablecoin issuers and investor protection. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please consider subscribing, liking, and turning on the notification bell. I'll see you in the next one.